Stocks fell in morning trading on Wall Street Thursday, which deepens a slump of major indexes as persistently high inflation continues to weigh on the economy. The S&P 500, the benchmark for many index funds, fell 0.4%. It's down about 18% from the record high it set earlier this year, nearly at the 20% point that defines a bear market. Investors have been worried that the soaring inflation that's hurting people shopping for groceries and filling gas is also walloping company profits. In fact, Target fell again, a day after losing a quarter of its value on a surprisingly large drop in profits. Well, joining us now to give us his outlook on the markets is Mr. Thomas Caldwell, chair of Caldwell Securities Limited. Sir, welcome back to Forum Daily.
Thank you, Nima.
Now, it's clear that these markets have continued to react to shifting world events. When do you think we'll be seeing a point of stability, sir?
Probably never. The whole nature of economies, markets, and world affairs is we go from crisis to crisis. And throughout all of that, our job is to seek opportunities within those crises. So, I think there's an old phrase, there's no time more uncertain than the present. So we're going to have this. We have wars, we have inflation, we have interest rates, we have China, we still have COVID. There's all this stuff, and a lot of them are overlapping. And a bit of them will get cleared up over time, or they'll sift into the background. But in the meantime, as they present crises, as they present panic even, that's really where opportunities live. I did a little bit of buying yesterday in the stock market, actually. So there's always things to do.
And we mentioned some investors are concerned about how these rising prices are impacting consumer spending and in turn company profits. What are you seeing, Mr. Caldwell?
Well, you have to look at it on a company by company basis. I mean, Target's declined yesterday. I've never been particularly impressed with that company anyway. So, I mean, you're going to have the weaklings get hammered to some degree, but the patterns of spending are so changed now. For example, the consumer has a lot of cash. They have lots of money available. They've been reliquefying by not spending during COVID. So you are having, how should I say, a realignment of spending. And listen, as price go up, people may drive less in their car. They may switch from steak to hamburger. They may eat out less, although the Uber bicycle guys seem to be doing some land office business. So you change your patterns. People aren't stupid. They will adjust to whatever the reality is. But remember one thing about, I guess, the inflation side. It is supply side induced. It is not necessarily excess of demand. It's the fact that you can't get goods, you can't get raw materials, you can't get microchips, and these are driving prices up. And also the government's stupidity in great measure. I mean, okay, let's hammer the energy industry. Well, guess what? Up go oil prices. But it goes over a long period. Even housing, to build a house or build buildings in Toronto or a condo is a nightmare. So regulations and all of these things, they add to it. So a lot of this inflation is supply side induced. It's not excess demand. It is in some areas, but basically the supply side. And that tends to work its way out. It tends to resolve itself.
All right, Mr. Caldwell. Well, meanwhile, there seems to be a rise in young investors through these investment apps and trading platforms. What sort of advice would you give to these young and first-time investors looking to invest online?
Well, I think basically a lot of them have been sold a bill of goods that it's an easy game when the markets are going up. Everybody's smart in a bull market. And the most important thing in managing money is controlling emotions, your greed, your fear, controlling those. And the best way to do that is with some advice, bouncing your ideas around. And if you do that, you have a lot better chance of survival. So I would say, seek advice. The thing with doing it yourself, if you arrive into this game and say, I'm going to really make a lot of money, you're coming up against pro traders and guys like me, and we're going to get you eventually. So I would say, get some advice, because to think you can do it yourself is arrogance. And markets have a very brutal way of dealing with arrogance. We've seen that in the first part of the year. A lot of these do-it-yourselfers have been massacred in this market.
All right, Mr. Caldwell, just about a minute left here, but what are you keeping your eyes on as the markets continue to shift according to world events?
There's always one or two that are really what I call the determining factor. I think the key factor right now is still the Ukraine, believe it or not. This is sadly looking like it's going to be a long, drawn-out, painful affair, but it's impacting Europe, it's impacting supply chains, it's impacting inflation. So that is clearly a very, very important factor. There's lots of other stuff overlapping that are quite important. But if I say that was the main thing I watched, because once you get Ukraine done, now we're going to go to rebuilding in Europe, realigning gas and oil supplies, rebuilding Ukraine. America is going to be rebuilding, building support, shortening supply chains. So I think for today, that would be the determining factor in my mind.
Definitely something to keep our eyes out for. Mr. Caldwell, thank you again for joining us today on Forum Daily.
Thank you so much.